Hey, what's happening? Happy hump day, party people. Just wanted to go live and see if I could give a quick update on the real estate market on some things I learned. Nothing too crazy outside of the obvious, but some small things. We had an office meeting yesterday, Tuesday, to talk about some things. Um, One being the code and compliance for smoke detectors for sellers. We'll talk about that. Also, this insurance, I'm calling it the insurance bubble. All right. There's some changes being made with the insurance industry that can affect home buyers a lot. So stay tuned to the end for that. And also, we're going to discuss inventory. We're in a market right now where the inventory is statistically low, but I saw some properties hit the market over the last couple of days, so we'll talk about that as well. So I appreciate you taking the time out to check out this video, check out this live stream. For more information on, anything real estate. If you're looking to sell or purchase, if you're looking to sell, I got 15 buyers pre-approved, myself ready to go, looking for the right property. My team members got some pre-approvals as well. So the buyers are out. If you're looking to sell, we can definitely get you home. So reach out about that. And also, if you're looking to purchase, still not a bad time to get in the game, and we can discuss, how to get in the game and what you can expect looking to purchase a property in this current market. All right. So give me a like and subscribe to my channel. Shoot me a DM if you have any questions, or you can give me a call. Telephone number is area code 203-843-3319. I look forward to hearing from you. So let's start it off with the smoke detectors. Up until this point, the requirement was for a seller to have smoke detectors and carbon monoxide detectors in the house. Okay. The building code was always, I don't want to say always, but the building code has been, you got to have them in the hallways where the bedrooms are, and they have to be 1 foot within the bedroom. So on the ceiling, measure 1 foot from the door is where they're supposed to be. All right, per building code. But as far as a real estate transaction goes, they only had to be in the house. You could leave them on the mantle. You could buy brand new ones in a box and put them on the kitchen counter, and it wouldn't oppose an issue. The only thing is that if you didn't have them up until now, if you did not have smoke detectors and carbon monoxide detectors in the house, there was a $250 credit that the seller would have to credit to the buyer for that transaction. All right. That's if you did not have smoke detectors in the house, there was a $250 credit. So a lot of people, a good portion of sellers would just opt for the 250. You're making $100,000 in equity on your property. 250, I don't have to go to Home Depot and buy smoke detectors. Now, you can get a box of combo smoke detectors. And when I say a box, it's probably about 10 to 20 in the box or something like that. I bought one last year and I got a couple left over, but I just used to pass them out and just to have. And you can get a box for $100 or less of smoke detectors, but a lot of people would opt out and just credit the $250, at closing, and the attorneys will handle that. They'd ask us, are there smoke detectors? And we say yes or no at the walkthrough. And if they're not smoke detectors, then, the attorney's going to call the other attorney and say, hey, listen, there's no smoke detectors. We'll take the $250 credit, or your client has to go to the store and buy smoke detectors. And they would opt out for the credit. The new law in place, this is from the Office of the State Fire Marshal, okay, is not only do they have to be in the house, they have to be in the specific locations per the building code now. There has to be one in the hallway, where the bedrooms are. And then there has to be one in each bedroom, a foot into the bedroom. Here, I'll pull up the document. See if I can share this with you. Here we go. So I'll pull up the document. This is the document that has to be filled out and signed and notarized by the seller now, stating that, yes or no, the smoke detectors and the carbon monoxide detectors are there. Are they operational? And are they interconnected? Now, interconnected is not a big deal. Operational, I mean, they have to be operational. All right. Do you have smoke alarms? Yes or no? Are they battery operated? So the minimum requirement is that they are battery operated. They don't have to be hardwired. And they have to be in each bedroom or in the immediate vicinity of each bedroom. The carbon monoxide detector has to be installed in the building, it says. It could be battery operated or hardwired or not required because the building does not contain fuel burning appliances, fireplace, or an attached garage. So if you have fuel burning, so like a natural gas furnace, a natural gas boiler, natural gas water heater, oil furnace, oil boiler, oil water heater, boiler or water heater, or an attached garage, any one of those things, at the least, you have to have carbon monoxide detectors in the house. It can be battery operated or hardwired. All right. And then you have to, the seller, this is all the seller has to check off whether it's operational or not, whether it's working or not, and whether they're interconnected or not. All right. Not required because the building was constructed before January 1st, 1990. So the building code states that any house built after January 1st, 1990 has to have interconnected smoke alarms and carbon monoxide detectors. I'm actually renovating a house right now that we had to pull permits on because we're updating the electrical, we're updating the plumbing, all of that stuff. So you had to pull permits on this stuff. So in order to get the permit signed off on, we have to have hardwired, interconnected. They don't have to be hardwired, but if they're interconnected, they're probably hardwired. They're connected through a wire. So if you're going to do that, you might as well run a power source, right? So I have to have this done in order for the building inspector to sign off on my permits. All right. So all of this has to be filled out by the seller, signed and notarized, and sent out to the buyer at closing, prior to closing or at closing. All right. And this kind of this is my lender here, and this kind of tells you exactly where they need to go. This document comes with an installation guide. If you would like to see a copy of this, you want me to send you a PDF, shoot me a DM or with your email address, or give me a call. I could send it over. I could text it over. But this is new law going with the requirements of law for smoke detectors. So it is a law going into effect October 1st, 2023. All right. So a big change happening here in the real estate market. All right. So before we move on to our next topic, if you like my content, right, my goal is to try to deliver, the best content. I want to be your go-to guide to real estate, whether it's buying, selling, investing. Hit the subscribe button, shoot me a like, shoot me a comment. Let me know that you're, that you appreciate my work, and I'll keep delivering good content. And if you want a one-on-one chat, you can also hit me up, and I love to talk to you. Either call, text, email, whatever you got to do. I'm available. All right. My next topic is this time to own program. All right. I did a video not too long ago on time to own, and it's a great program. All right. It's in the state of Connecticut. The time to own program is being ran through CHAFA, which is the Connecticut what is it? What does CHFA stand for? Connecticut Housing Finance Authority. Yes. So CHFA for short. So CHFA already has their own down payment assistance program. And it's not even necessarily down payment assistance. You can go through CHFA just to get a lower interest rate. All right. But it is still considered, a down payment assistance program, in the lending world. Right. So you don't have to necessarily use the down payment assistance. You could go just to get a lower interest rate. You can go through CHFA just to get an interest rate. So your lender that you go through has to be a CHFA lender. All right. All my lenders are CHFA lenders. Okay. So you have to qualify, from your lender first, right? You got to get an approval on your mortgage through your lender. Once you get an approval, a commitment letter from your lender, they then forward you through the CHFA process. Now the CHFA numbers are a little bit more tighter, a little bit more stringent, meaning they're not going to give down payment assistance to just anybody. You have to need the down payment assistance, right? So there's income limits on the CHFA programs. Anything CHFA, anything down payment assistance, period. There's going to be income limits and guidelines on whether or not you qualify for that property. So the credit score is going to be one thing. The debt to income ratio is going to be another thing. And then also you have income limits on top of it. All right. So when I did the video before, I got a lot of calls. I got a lot of people reached out. I'm so glad everybody reached out. Good to know that my content, reached a lot of people and got a lot of people interested. But after getting everybody through the process through a certain point, we realized this wasn't a program that was a good fit for everybody. Some people made way too much money. Some people had high DTIs or whatever. You gotta be through the program in order to get access to the funds. All right. So now that's just CHFA. So now you got the time to own program on top of that. Same rules apply. But with the time to own, they give you an extra $25,000 or $50,000, depending on the location of the property, as a forgivable down payment, forgivable grant, forgivable down payment assistance. So this $25,000, $50,000 loan goes away after 5 years, I believe. All right, and every month, CHFA would update on their website. You can go to their website, chfa.org. Excuse me. You can go to their website and you can see how much money is left to be distributed. Okay. Now we got an email Monday or Tuesday saying that it seems like the government or CHFA was replenishing the fund for like 20 million a clip every time. So it seems like every quarter, just about, they will replenish the funds with about 20 million. And then from there, you have to apply in order to get access to the funds. And every month you will see how much money is left in the program. So I got an email at the beginning of the week saying that there was 90 million left. Okay. Now, if this thing is, and that they had just got granted, they were just granted another 20 million, or I'm sorry, there were 70 million. They just got granted another 20 million, which brought it to 90 million. All right. So, which drew a red flag for me, because when this program first launched a year ago or almost 2 years ago, the money was flying out of the program fast. You couldn't keep up, and you're like trying to hurry up and find a house and get it under contract or whatever, so you can hurry up and submit to make sure you have money. And it kept running out. And then, like I said, every quarter they would replenish. All right. So after the first couple of times of them replenishing, you're like, okay, they're just going to keep replenishing this thing. There's no need to rush. You're making this mad dash trying to get that 25 to 50,000. This is what I saw. And they kept replenishing it. So this went on for about a year. And now I noticed that, this last replenish funds that were granted, this last 20 million brought us up to 90 million. That means the money's not going anywhere. So it just brought me to this point of, okay, what's going on with CHFA? And it all boils back to, I'm assuming, it all boils back to the interest rates, right? The interest rates are causing some buyers to be a little bit high on the debt to income ratio side, of the mortgage. So with the interest rates being high, taxes going high, prices are still going up, right? So the average home price is like 300,000, right? So with 300,000, a buyer has to make about $80,000 a year in order to get pre-approved or get approved for a $300,000 mortgage. But once you start factoring in the interest rates going up, taxes going up, home prices going up, that 300,000 starts to shrink a little bit, right? So instead of getting approved for 300,000, now you're approved for 280, just shooting out round numbers. Now also, CHFA has their own debt to income ratio requirements, which are even tighter than a regular FHA. So FHA, you might go 50%. I'm just shooting round numbers just to give you an example. I don't know exactly what it is because I'm not a lender, but I can put you in touch with a lender that will give you a better idea. But I'm just giving you examples, right? So let's just say a regular FHA mortgage is 50% DTI. CHFA's is 40%, right? So at a 40% DTI, you now shrink your pre-approval amount, your purchase price. You're going to shrink that down even more, right? So it seems to me that people that were going through this program to try to get that money, to try to get that grant, were having troubles due to the debt to income restrictions because of the interest rates going up and the purchase prices going up. So not a lot of people are able to use the CHFA funds. So you can't even come into the program, right? I think the immediate answer to that or solution is, okay, well, what if you make 100,000? All right, well, you can't make 100,000 because there's income restrictions on this program. Again, just using round numbers to give you an example. I don't know exactly what those numbers are, but they're up here on the website. You can't, matter of fact, let me share it. I'm sorry. So you can't make 100,000 and go through the program because now you're over the income restrictions for the down payment assistance. So I think that is where the issue is. And that's why. So now there's $80 million in the program right now. But also on the website now, they are saying that the time to own program is not currently accepting new reservations. The program will begin accepting reservations again upon availability of new funding. I don't know what that's about. I might have to give CHFA a call and see what's going on. But so just a quick timeline. Monday, I got an email saying that $20 million was added, and there was 90 million around Monday. Okay. And then I got an email from my lender saying a couple of days later or yesterday saying, hey, there's no more CHFA, no more time to own through CHFA. And I'm like, wait, I just got the email saying that it just got replenished. And nope. So I go to the website and I see it right here. The time to own program is not currently accepting new reservations. All right. So it doesn't say that it's done. It says upon availability of new funding. So I don't know if the government stopped sending out the money. Maybe that last 20,000 was the last bit, but there's still 80 million. Excuse me. The last 20 million was the last draw or whatever, but there's still 80 million there. So I wonder what they're going to do with that. So I'll keep an eye on that and update you guys as I get more information on that. We're going to go on to our next topic. And I think this one is even more important than this one. And again, I'm not telling this information to strike fear. I'm just telling this information to educate you so you can plan accordingly on how you want to move with your home buying process or even the selling process, right? I think that people that have to buy and should buy. I think the people that have to sell and should sell. I think if you can afford to wait, then you can afford to wait, and you probably should. You know, if you can afford to wait for prices to go down to buy, uh, to put yourself in a better position of buying, then maybe you should. But the way this market's going, I don't know if the prices are ever going to go down. But this last topic I want to talk about may be the cause of having home prices going down. So sellers beware, and buyers be educated, right? So I'll set the stage for this one. Got a property under contract with a client on the buy side, representing a buyer, and you get the way this goes is you get a property under contract. I usually do about 5 days, 5 to 7 days for a home inspection, depending on how soon I could get my home inspector out. So we did a 5-day home inspection, got the inspection done like the next day, right? Everything went smooth, negotiated terms, we're good to go. Buyer got the mortgage packet, right? So in your pre-approval, when you get pre-approved, your lender gives you accounts for like an estimated interest rate, estimated taxes, estimated homeowners insurance. The property we got under contract is in East Haven, and everybody knows East Haven taxes are traditionally the lowest taxes around. So the taxes are very low, very favorable for buyers. Home inspection is good, tax is good. Loan application went out. The lender also estimated about $1,400 bucks a year for homeowners insurance, and that's usually the going rate. Now we kind of pride ourselves in, using our network of insurance agents that a lot of times we're able to get it even lower. Like we've gotten, full quotes, with everything, all the bells and whistles for $800, and like that's this year, like not even that long ago, right? So, but 1,400 is like going rate. If we can beat 1,400, we're winning. If we get at 14, if it goes to 15, we're like, let's keep shopping. Let's see if we can find something else. So we get to the point where the client has to provide homeowners insurance. So I called one of my go-to. I said, referred her to one of my go-to insurance agents, and she gets a quote, and she calls me and she says, "Hey, listen, I got a quote for $4,000." And then I called Geico. I don't want to not shaming Geico. I'm just telling you what happened. But then I called Geico because that's who my car insurance with, and Geico quoted me $5,000. And I'm like, all right, let me call this girl because maybe she thinks the house is in the flood zone. That's not right. Don't sign anything. Let me take care of it. So I called the agent. I'm like, hey, this property is in East Haven. It's not near the airport, and it's not in the flood zone. She said, oh, yeah, I know. That's just what insurance rates are right now. And I'm like, $4,000 for a regular 3-bedroom, 1-bath house, $300,000 house, nice house, good condition, new siding, new windows, all of the issues that an insurance company would have been repaired on his house. Everything's updated, right? So what do you mean that's what the rates are? She's like, yeah, I got insurance companies dropping out and da-da-da-da, all this insurance lingo that I don't want to bore you with. So, okay, now I got to hit the phones. Me and my lender, we hit the streets. We hit the ground hard. I had to call my broker, like, listen, the bottom's about to fall out. Like, I don't watch the news, and I try not to scare myself or my clients, but $5,000 in insurance scared the heck out of me. I thought this thing was over. So we had an emergency office meeting. I don't want to say emergency office meeting. We had an office meeting, and we discussed this. But it was, it was this insurance issue. Apparently, I was the first one to find out. So it was my deal that triggered this meeting, and we had Jennifer Crowley who's our office insurance agent, our affiliate office agent. And, she brought some light to the situation. And in the process of talking to Jim, we actually got a quote for $1,400. Okay. So what it seems like is the big companies, due to the Canada fires, the storms in the Midwest, the mudslides on the West Coast, hurricanes in Florida, right? Hawaii. I heard Hawaii come up, right? Due to all of these insurance claims, it's causing insurance companies to be very, very picky on what they write policies on. All right. I'm not an insurance agent. I'm just telling you what I learned. It might not be, I'm paraphrasing a lot. You know what I mean? But insurance companies are being picky on what they are writing policies on, where these policies are written, and the underwriting process in which they write policies as well. So we found out that some companies won't write the home insurance policy unless you bundle the car. Like, you're gonna have to bundle the home and the car in order to get this home policy, if the pricing is what you wanted. So they'll give you a quote contingent upon you bundling the car. All right. So I said all of this to say that there's a lot of volatility, uncertainty, ratchetness. It's a lot of stuff going on in the insurance industry right now that is going to directly affect the real estate industry. All right. So here's my advice to a buyer that's purchasing, to the agent that's helping that buyer purchase, right? To the seller that is listing the home, and even myself. And I don't even know if this is 100% legit, like if I can do this, but this is where my mind is. I think that when you submit an offer, you have to submit an offer with a pre-approval letter, right? Or a proof of funds. I think you should get the home insurance quote at the same time you submit that offer. Normally, we wait as the buyer goes through the approval process with the mortgage, right? And we kind of wait for the lender to say, okay, hey, we're ready for insurance, right? There's usually a reminder. They have a process. So I usually let them do their process. But now I think we really have to be proactive, right? I'm not telling you not to buy. I'm not telling you your insurance is going to be $4,000 or $5,000. What I'm saying is you're going to have to shop around to find the better options in order to work for you. And I think that needs to happen up front. I've been seeing a lot of properties come back on the market due to, buyers not being able to finance because the interest rates are changing every day. So this pre-approval that you got 30 days ago, when the interest rates were 7%, right, now are 7.5%, 8% or whatever, that could change your DTI. And unfortunately, a lot of these buyers are not finding this out until it's too late, until we already got a property under contract. You got to be careful when you have a property under contract, because in order to have it under contract, in order for it to be a legal binding contract, you have to have a earnest money deposit. So you put $3,000, $5,000, $10,000 up for an earnest money deposit. You have money on the line. So you want to make sure that all your ducks are in a row as you distribute, that earnest money deposit. So I'm suggesting that, and I have a listing getting ready to come on. I got 2 listings getting ready to come on, both in Hamden, right? I'm going to put on the MLS, please submit pre-approval and please submit insurance quote too. I don't know if I'm overstepping. I think that's a buyer thing, right? But I want to make sure that my seller is not going to get into a situation with having to deal with high insurance quotes after we've taken the property off the market for 3 weeks. You understand? So I'm going to talk to my broker about that further, but that's definitely what I'm going to ask on the sales side. And I'm definitely going to encourage my buyers to do that as well. I'm going to practice what I preach, right? So I think you got to be a little bit more diligent now on your homeowner's insurance. It's a thing. It's here. I don't even want to go down the list of names of these insurance companies, but I can tell you there's some big companies that we use, every day that are quoting $4,000 or $5,000 home insurance policies here in Connecticut. Okay, so be mindful of that. Also, your pre-approval. I'm gonna do a home buyer seminar live, but your pre-approval in this market, you don't want a pre-approval. You don't want a pre-qualification. You want a fully underwritten pre-approval. And if you're working with an agent or working with a lender, that your agent should be pushing for you to get a fully underwritten pre-approval. Your lender should be collecting docs. If you haven't submitted pay stubs, bank statements, verification of employment, tax, W-2s, all of that stuff needs to be done up front. Now, I'm losing. Usually, you get a pre-qualification or pre-approval in 24 hours or less, right? I'm losing another 2 days. I'm adding on another 2 days to that process just to go ahead and get it get the file fully underwritten, right? If the file's fully underwritten and they can put on the pre-approval letter that it has been underwritten and the documents have been verified, right? That's going to save you a week to 2 weeks on your purchase. So normally a real estate transaction takes anywhere from 30 to 45 days. We're getting conditional approvals in a week and a half. Now, the only thing we're waiting on is appraisal, right? So if we get inspection done, if we get insurance done, if we get all of this stuff done in the first week, you can probably close in 3 weeks, less than 4 weeks. I had one deal, I had almost clear to close in 3 weeks. The only thing that was outstanding was the daggone solar panels. You got to transfer the solar panels. And it was like a miscommunication between the solar company and the buyer. So that wind up adding on another 2 weeks of the process. So we wind up closing in 45 days instead of the 3 weeks, which we planned on doing. But I had conditional, commitment from the bank within like a week and a half. Conditional approval, commitment letter, same thing. So, and that was based off of a fully underwritten pre-approval. And that's what you want in this market, right? So I'm surprised. We got like moral ethics, code of ethics that we got to abide by. So there's certain things that we can't ask for. There's certain things about the other side, that we can't know on our side. So I get it. It's a fine line, but I think you would help everybody out, my client as well as your client, if we took these precautions, made these steps. If we made these steps of getting a fully underwritten pre-approval, getting the home insurance out the way. Why not? Why not? Because the lender is going to give you an estimate. The lender is going to say, all right, we added in $1,400 a year for home insurance. We added $5,000 in taxes, right? I send every property, whether the pre-approval is fully underwritten or not, I send every property to the lender, because I'm not just going to write an offer and then, the taxes are $50 too high. The home insurance is not going to work. Interest rates went up yesterday. Like, you know what I mean? So I send every property to my lender, and I don't care if my lender likes it or not, but I got to do it in order to bring peace of mind to everybody involved, myself and including my client. So when we get into a deal, actually, when we start looking for houses, we don't start looking for houses unless we know it's going to close. Like, we can't put $5,000 up and then have to deal with unforeseen issues. Let's get that out the way now. Let's get it out the way right now. Traditionally, lenders, I don't want to be specific, but lenders can issue you a pre-qualification, what I call a pre-qualification, just based off of what you tell them, just word of mouth. Just, yeah, listen, I make $100,000 a year. I got $20,000 in the bank. I've been on my job for 2 years, and I filed my taxes. Okay, cool. You're pre-approved for $350,000. That's what the pre-approval, a pre-qualification is. And they will send you out in the market like that. Like that. I've been in situations, unfortunate situations where I had to let clients go. Because I can't work like that. I can't drive around the state with a pre-approval that specifically says on the pre-approval, documents have not been verified. Income has not been verified. Employment has not been verified. It says it on the pre-approval. I'm submitting offers with this pre-approval, and it's not about me. I'm not trying to make this about me, but it's embarrassing for everybody involved when the listing agent says, and you know, the listing agent has 4 other offers, 5 other offers, 10 other offers, and they look at your pre-approval and none of this stuff has been verified. Are you sure you can't even afford this house? Like, that's a problem. That's a problem. It's not about me. It's about my clients come first, 100%. But I could tell you the last 2 contracts for sure. The last 2 contracts I got accepted was based upon my reputation of being a closer, of getting my contract from contract to close. And I built that. I even did the math. I got a 96% close rate. I'm not bragging. I'm just telling you, like, that's important to me and my business and the way I'm able to help my clients. I got a 96% close rate. And I could tell you, I could count on, out of 200 transactions, I could count on one hand how many deals didn't go through. All right, maybe 1.5 hands, right? How many deals didn't go through and why they didn't go through. Okay. And it was, a lot of them was due to things like, not getting a fully underwritten pre-approval. We'd have got this done in the beginning, we probably wouldn't have had these issues. You know what I mean? It wouldn't have affected whether or not we close or not. It just would have said, okay, listen, we need to take care of this now. Let's revisit this in 30 days after you handle what you got to handle, or 60 days after you handle what you got to handle, instead of just getting a pre-approval and going out there and not being able to close. There's a lot of properties coming back on the market right now. And that's why the interest rates we can't control. I get that. But there's a lot of lenders that are not doing their due diligence that's causing these people to potentially lose their deposit money, and sellers to waste market time by getting these buyers under contract, knowing that you didn't dot all your I's and cross all your T's. So let's add the insurance to that equation. We want fully written underwritten pre-approvals, and we want insurance quotes also up front. Get all that stuff out the way up front, and go purchase your house. Go purchase your house. Make sure your home inspector's on deck. I got amazing home inspectors that I use. Attorneys, make sure, let's get the attorneys out the way. Who you using for an attorney? All of this stuff needs to be figured out once the offer is written, before it's even submitted. Before the offer is submitted, we need to figure all of this stuff out. That's my real estate tip for y'all. That's my market update. I hope you like this content. If you would like for me to help you with your real estate needs, feel free to reach out. If you want to work with anybody on my team, Jerard Graham, Vincent Taylor, Sean Lewis, Shani Sorrells, Gloria Dennis, and Miss McNeil, Sharice McNeil. We growing so fast, I'm forgetting everybody's names. It's like, I'm just kidding. I love all of them. I love all of them. They're all doing awesome. Everybody's growing. We're going to be a great team. If you want me and my team to help you out, feel free to reach out. You can email me at gerard@thegibsonteam.com. gerard@thegibsonteam.com. That's JERARD. Right. Give me a call, 203-843-3319. Comment below, like, subscribe. I'll catch up with y'all later.